I'll just try to introduce the topic for this session, which is green affordable housing landscape in India, green lending, refinance and support to HFCs and developers.
The most influential, I would say, actor in this whole ecosystem is going to be a financial partner. And I think whether it's KFW or say ADB or anyone, I think that's the starting point of any initiative which requires a push from that side, right? So to make it a more commercially viable proposition. So I'll just take a cue from what I started with, that as far as the overall green lending is concerned, goes back to refinancing of the lenders who are eventually doing this, and the ecosystem to be developed so that the lenders get the money from the green ecosystem is going to be a very imperative thing here. I think in the previous panel there was one discussion that developers are not making affordable homes, right? So I think in case of Haryana's affordable housing policy, they came up with the initial guidelines, they did very well. Then suddenly for 2-3 years no developer wanted to build because they had capped the per square feet rate for these developers, but then realized after 2 years, 3 years that this is not making it viable. They increased the rate by about 1,000 rupees a square feet. Then again that scheme has got into motion. So I think government is also have to be proactive and understanding the practicality of it, this whole thing. And fortunately or unfortunately, lenders can only lend when the product is green. Only then is green lending. And as far as financial partners are concerned, there's an influence we can make, but there has to be the other party also has to be made equally, I would say, aware or conscious of it. Because when AFD gave that line to NHB, and NHB reached out to all the housing finance companies and they said, show us the portfolio where you have green but affordable housing. And nobody had any. And to disburse 800 crores, they took, I think, 3 years across all HFCs. So just a small amount of 800 crores took 3 years to get disbursed. So what it showed was that it was a total lack of supply of the asset class which needs to get created. So I think both these parts need to go together and they have to be dovetailed, whether it is the green financing ecosystem or it's the supply of those asset class to come by, and both have to go together in this whole journey.
I really want to build on what Monu just said about creating the supply, and also based on what we learned this morning in the sessions, the demand is taking a very long time to come if we are expecting the demand to come from the buyers themselves. So I have this following idea, which is that we really need to look at the key stakeholders whom we need very carefully and look at what motivates them. I think Dr. Sejal said this morning that everybody has to be commercially incentivized, otherwise they won't do it. So let's figure out how to commercially incentivize them, what makes sense, and then look for little bits of value that could be created that are not being created today. So, and how do we turn those into new sources of perhaps pull factor or push factor for the supply? And essentially, again, building on what we heard this morning, standard certification is really important. People will do what you reward them for, provided they understand the system that you're rewarding them with, and that it's not binary. You can have a gradual, you can have an entry-level certification, and then you can gradually improve, and the rewards should be commensurately rising with those. So we really need better rating systems and certification. And then we need some nomenclature. For example, we can have, I'm just using very simplistic terminology, you can have the green building, the standing version, which is made with reduce, reuse, recycle, and all the things Professor Lal was talking about. then you can have the green, you have the standing building and you have the running building, which is once it's occupied and it's who is making the decisions for the appliances, etc. inside. My contention is that neither a normal developer nor a normal occupant are the right people to know what to ask for. So waiting to ask for their demand to come along is not going to help. So essentially where I'm going with this, oh, and I had one more point to make, which is that the low-income buyer would like to maximize their floor area and not spend part of their money on getting a more efficient air conditioner, which has a lifetime cost that may be lower, but upfront costs more. So we can't expect them to make that trade-off. It's not fair to expect them to sacrifice to go green, even though people tell us that there is no sacrifice, but from the cash flow point of view, it looks that way. So I would say that we need to have a new entrant.
Housing in general is really, really important for the economy, right? Something to the tune of 7% of GDP, and I believe the second largest generator of jobs after agriculture. So it's an important sector to be talking about, important to be looking at, right? And what really struck me was I actually I came across some reports that stated that real estate is expected to grow at about 19% on average every year over the next decade or till 2030, which is 2x, let's say, of GDP growth, right? More than 2x of GDP growth. So even more reason to be thinking about it. But then, when you look at green in terms of housing, good news is, of course, that India's sovereign green bond framework of the 9 project categories that it's got green buildings as one of the project categories. And remember, there was a fairly sizable sovereign green bond issuance earlier this year in 2 tranches, Jan and Feb, which means, putting pricing and greening aside, that there is appetite not just for this, but for all the project category end uses, right? Because the proceeds of that money have to be applied to one or more or all of these 9 categories. So implicitly, if the market is accepting a $2 billion issuance, what it's saying is, green buildings is something that I believe is worthy to be classified as green.
For the benefit of the audience, I come from KfW, that's the German Development Bank, owned by the German government. And what we essentially do is we offer concessional finance to the sovereign, to the government of India. So which also means that we are not able to directly work with the private sector developers. That's really important to clarify here, because I often get requests that, okay, this is a new green building which we are doing, how do we get finance for the same? Sorry, we can't do that, but our partners can. So what we do is we work with financial institutions, financial intermediaries like National Housing Bank, like State Bank of India, and we have these open lines of credit wherein we set the criteria for energy efficiency, and when the project meets those criteria, that can be refinanced under our lines of credit. What we mean by green building, we actually look at this entire housing concept from the energy efficiency lens. So as Gagan was mentioning, there are different definitions of green. What as financiers or what as KfW we look at is energy efficiency component of it. The other aspects are treated as good to have. We don't say that you don't do it, but they are more in the category of good to have rather than a necessary condition to be part of our lines of credit.
In the current time we are living in, for a financial institution, it's a tough road ahead, right? Because I think if you look at criteria which are defined, which are very easily defined, for example, RBI says you have to do PSL lending, priority sector loans. It's defined by very numerical parameters, very easy to do. And as Gagan mentioned, now green financing, how do you prove? So you go to a banker and he says, how do I know? What have you done? So that's the problem statement. And I think we are living in the chicken and egg situation here currently. So what's going to come first? So I think at least in our lifetimes, we'll have to do the more hard work to define this. I think as a financial institution, as per me, there are two easy ways first to create that asset class. One is to finance the developer and ensure that he makes green. So there's enough supply so you can do green mortgage, retail mortgage. That's one side of it, which I feel is a fairly easier way to do this. Create your own supply and then you finance that supply. One very captive way to do it. The second thing which I feel which is there is that, which now we have a project with another DFI where we're trying to work on a project of minimal standards of green for self-construction houses, right? And I think that's another area you can make it successful, right? So with the DFI partner, they've defined as 7 things to do. You do these 7 things, hence it is green, and that's how it is. So something like this experiment seems to be the next easiest way to create that supply to your side.
Fundamental similarities between renewables, EVs, and housing. I mean, at the outset, you'd probably think, what is a renewable plant got to do with the EV, got to do with the house? The fact is, these are hard physical assets which you can touch and feel, and from a banker's perspective, also repossess, right? if you have a bit of a problem. So such assets tend to be majority debt financed, right? Now, whether it's majority debt at a project level, such as, for a renewable energy project, or at a consumer asset level, let's say a vehicle, or housing loan, the loans to value will differ, but it'll be majority debt financed. And to sort of further think about this is, think of a software business, right? Now, software businesses are hardly ever debt financed, although the concept of venture debt is emerging. But those are all venture capital, venture equity financed. So the role of financial institutions as vehicles of delivery of debt, very, very important, whether you're talking about renewables, whether you're talking about EVs, whether you're talking about housing. And just to give you a sense how big these loan books are, the loan books of Indian banks, I'm not talking about NBFCs, just the banks for the power sector is something to the tune of $80 billion. As a matter of fact, the NBFCs actually are much bigger because PFC and REC together are about $100 billion. You add IREDA, you add L&Ts, you're probably talking about $220, $250 billion for the power sector, which banks and NBFCs have, right? So big exposure. The auto loan books, by the way, I was pretty surprised, are also quite substantial. The auto loan book of banks is about $60 billion. And of NBFCs is about 80, so 120 odd billion dollars out there. Sorry, 140 odd billion dollars. Slight difference, these will be shorter tenor. The power sector loans will be longer. But anyway, so big numbers. And I think Monu was telling me that the housing.
I think the general person who understands how a bank account works should, in the near future, at government expense, receive awareness-raising messages to understand the concept of payback in terms of investing in water-saving devices or energy-saving devices, energy efficiency. This should become a kind of mainstream understanding, and that no individual can pay for the cost of that awareness-raising. It has to be the government through messages funded by them and designed by maybe others. But so that awareness-raising is really important for India. Next thing on capacity building is, I think we really need to rope in our R&D institutions, and we need to look at what is, first of all, on the standards. We've been talking about standards. We need far more user-friendly standards and achievable, that are easy to communicate, and gradations. So one thing the R&D institutes need to be helped with is standards, which are appropriate for India. Second thing is climate appropriate materials, and the test could be, of course, Professor Lal is the expert here, but I think we could, just for the general public, we could say that what are the climate appropriate materials, depending on which part of the country you're in, that would allow you to stay at 24 Celsius inside your dwelling with minimal mechanical cooling requirements. Entity which is in urgent need of training is the urban local body, and the municipalities and everybody. They need to understand what kind of stake they can get in this. What is the linkage between creating these things and good locations and the spillover benefits, etc. So there's a lot of training needed there. And then, of course, the usual suspects like the architects, engineers, students, next generations, end users, lenders, everybody else. But we need the thing for Indian, things that apply to India. That was the main point. It's very interesting to see how certain multilateral lenders have done rooftop programs in India. ADB has done it, World Bank has done it, and how they designed it pan-India on almost a competitive basis. Like, so if you have, what I fail to see right now, and I think we need to have this, is the lighthouse projects that the previous panel was talking about. There's no sort of visible path of linking the findings from that into the next step, which is, so if that was a demonstration, you normally go from a demonstration to a pilot to learn various lessons all over the country. From there, you proceed to a program. You develop a program for which you then seek international funding. From the program, you then create a platform, like with your either National Housing Bank or anything else. And then from the platform, you go to the green bond, because then you've solved the problem, which Gagan was saying, is that where are the projects? So you create this pipeline of projects sitting on the platform, ready to go, because you've developed them based on your pilot and your learnings from there to a program and so on. So I think that, and tying this up with the carbon market, which would be another unique Indian characteristic, because we have the Indian carbon market, and some credits cannot be traded, but voluntary carbon market can be traded. So there's a lot to be done, and I just think we need more coherence, and that's what was going to be my last remark. Thank you.